Okay, so I hope that the question is visible to all of you, everyone. Today we are going to solve one more question, which is on this forward rate risk, futures, and options of risk management only. So we have to always consider ki what all options are already given in the question. Always look at what is the requirement in the question based on the three hedging techniques considered. Considering recommend a hedging strategy for 48 million investment. If interest rates increase or decrease by 0.9%, support the answer with the appropriate calculation. This is what is given everyone, right? Now in this question, again, we have to consider if FRA is being used. So first of all, I'll put down that forward rate agreement. Now, it's expecting to receive 48 million on 1st Feb and will be invested until it is required for a large project on 1 June 20x4. Okay, we are receiving that 48 million on 1st Feb and will be investing it till 1st June. ठीक है, Feb to June. Due to uncertainty in the markets, the company is of the opinion that it is likely that the interest rate will fluctuate significantly over the coming months. Although it is difficult to predict where they will increase or decrease, want to hedge it against it. So we are planning to use forward rate agreements, interest rate futures, or options on interest futures. Can invest at the relevant interbank rate less 20 basis point. The current interbank rate is 4.09. Is of opinion that the interest rate could increase or decrease by 0.9. 3 month future का data is given everyone. Futures percentage yield is given, options का data is given, and the FRA is given. Right. Now we have to consider what is the date. Assume that it is 1st November 20x3 and there is no basis risk that is involved. Okay, now, okay, so but it is November. So we are going to invest after how many months? Feb May. So complete November, complete December, complete Jan, complete Feb. 4. And we are investing for how many months? From Feb.
So we are gonna invest on Feb first, right? So like
Oh,
3 month
correct.
gap.
3 months, not 4. We have like November, December, Jan because we're investing in 1st Feb. So first will be 3 dash. Up definitely it is going to be 3-7 rather than 4. Why? Because Feb, March, April, May for 4 months. So my forwarded agreement is going to be 3-7. 3-7. Oh, sorry. What is the agreement of 4.82? Right. This is going to be my interest rate. So now what I'll write down, if interest rate increase 0.9%. So what will happen? To find out investment return, then now what will be the investment return, everyone? First of all, we have to find out that we are able to take up the loan at 4.09. However, it can increase or decrease by as much as 0.9. But we are able to take it 20 basis less. So my general interest rate will be 4.09 plus 0.9 minus 0.2, 4.79, everyone. So 4.79 multiplied by, but I'm directly using 48,000 over here. So I'll use million, 0.000 multiplied by 4 by 12. So this is what amount I'll be getting on if interest rate increases. Now because of
So
FRA, yeah,
uh,
return, not FRA return. Now with the help of FRA, we can take the loan at 4.82, correct? So I'll do one thing. I'll copy this one, paste it over here. I'll make it 4.79 की जगह 82. Can directly do that. No, but the interest will change, right? It will become 4.62. Why? Because it is given as less 20 basis point, right? So what will be my payment to bank? This minus this I have to pay to the bank directly.
That is
Okay. So now if interest rate decrease by 0.9, so what will be my final interest rate? It will become 4.09. Okay, it will become 4.09 minus, okay, minus 0.9 minus 0.2. I can directly use that in calculation. Na? Over here, I'm using 4.7 in calculation. I'll use this one in calculation only. So I'll copy it, paste it over here, and this will become 2.99 only. Okay, it will become 2.99. Now FRA ka return will be how much? FRA return won't change, right? It will be same. So now what is happening over here? My investment return is this much. As per FRA, I'll get this one. So profit from FRA is how much? This amount minus this amount. So now this is the profit that I'm getting because of FRA. So this is how FRA is being used. Over here, what happened? Now interest rate increased, but I have already fixed my interest rate. So what is happening? I am having a loss. Over here, what is happening? Interest rate decreased, but I have already fixed my FRA. So what is happening over here? My interest rate improved. I am getting a benefit over here. So this is how FRA is being used in this question. Got it? Now we'll write down futures. Okay. Futures. This was forward rate agreement. Future में we will follow all the steps that are given. Step number 1, that is number of contracts. Write down the whole formula. What is the borrowing or the deposit amount? 48,3,123 divided by contract size, which is given 2,000,000, 2,000,000. Okay, multiplied by what is the total time period for which we are taking loan? Sir, we are taking loan from Feb, March, April, May. 4 months, 4 by 12. Total number of contracts, we are directly getting 8 contracts. It makes things easier for us as well, right? Oh, sorry, I did tell it should be 32 contracts. How many contracts are we getting, everyone? 32 contracts. Just a second. Yeah. Now we have to move to the second step, that is your basis risk. Now basis risk का calculation was very simple. Bracket में spot 100 minus. Now what is LIBOR being given over here? What is LIBOR? But a LIBOR is directly given as 4.09. Correct. 4.09 bracket minus futures का close out price. Now, but I want it for Feb, so I am taking it for March because that is the best option that I have. So I'll subtract 94.76. I get 1.15. ठीक है. Now after we'll find out unused basis, that will be equal to this amount divided by extra months. Beta, I needed it for first Feb. I am taking it for which month? March. Feb extra, March extra. I need 2 months extra. ठीक है. That will be multiplied by 2 divided by total number of months will be how much, everyone? Total number of months will be how much? If you take it from the start, November, December, January, February, March, 5 months extra. So unused basis is going to be 0.46. Now we'll find out future closeout price. Find future closeout price. In case of increase, over here I'll write down 0.9% plus, over here I'll write down 0.9% subtract. इन केस ऑफ इंक्रीज को मैं केस ऑफ subtract, मतलब in case of increase of 0.9 and in case of decrease of 0.9, correct? So what I'll do is at the start of the day I'll put down spot minus LIBOR. Now spot minus LIBOR is going to be how much? 100 minus, now LIBOR के लिए बेटा I have to consider both the parts, ठीक है? That will be equal to how much? Increase मतलब 4.09 प्लस 0.9, तो कितना हो जाएगा? 4.09 प्लस 0.9, ठीक है? This will become 95.0.
Do we not take, sir, do we not take
अनयूज
less
बेसिस ना,
basis?
आई डू दैट, आई थॉट कि लेट्स डू इट, चलो यहीं पे कर देते हैं। अनयूज बेसिस माइनस माइनस अनयूज बेसिस 94.55, ठीक है? ओवर हियर वी हैव टू डू द सेम थिंग। आई विल डू वन थिंग, आई विल कॉपी कंट्रोल ओवर हियर and over here 0.9 will be negative 96.35, ठीक है? Now this is my spot minus LIBOR. When this is not required that you write it down, it is absolutely fine if you don't even write it down. Okay. So after future closeout price, we can go to the next step, which is finding the tick value. Is the tick value provided over here, everyone? Just give me a second. Let me see if the tick value is being provided. I don't think that the tick value is given in this question. Yep. Okay, so the tick value is not given, so we have to calculate it, everyone, which will be equal to contract size 2, 1, 2, 3, 1, 2, 3 multiplied by 1 upon 10, 1, 2, 3 multiplied by T by 12. There is a formula for the tick value. We can directly use that. And after that, we have to find the outcome of H, right? Okay. Up till now, if you guys have any doubts, please let me know. Wait. Now let's move to the outcome of H. And when I move to the outcome of H, beta, we again do the increase and decrease wala part. We'll take it, we'll paste it over here. And again, first of all, actual cost of, over here it will become actual return from borrowing, right? From investment. So now what will be the actual return from investment? We have invested how much? 48 million. 8, 1, 2, 3, 1, 2, 3 multiplied, sorry, multiplied by a period of how many months, everyone? A period of, that is a period of how many months? Feb, March, April, May, 4 months. 4 by 12 multiplied by the final interest rate. Okay, right. That is the important point. So 4, I'll just multiply it by the, in the bracket, I'll put it down 4.09 plus 0.9 plus, what is the percentage, everyone? Sorry, minus 0.2. That will be my final interest rate, correct? And over here, I'll put down a percentage. 766,400. So we can do one thing, we can directly take it from here as well. That will make things easier, I guess. And in case of decrease, what will be my return? 478,400. Since we have already solved FRA, it made things a little easier for me. Okay. Now we have to find out gain or loss due to FRA. Correct. So uske liye, but I'll do one thing. I'll put down over here future price, future closeout price. ठीक है? अब इसमें बेटा क्या होगा? We are buying at this rate, sell at this rate. Now, what is the future price and future closeout price? That is something we have to think. So for this question, what is my future price? Sorry, future price is same for both the part, which is which is 94.76, and future closeout price. For one, it is 94.55. So over here, it will be loss. Why? You can directly see now I'm buying at 94.76. I'm selling at 94.55. Am I making any loss? Am I making any profit? Absolutely not. So that will be a loss for me. So I'll directly write down over here. That will be equal to, over here, I'll write gain slash loss from futures. So what I'll write down, my future price buying minus my future closeout price, that is 94 point. I'll do one thing, because buy now is on first. I'm buying over here and selling at this rate. Okay, so what is happening? Buying at 94.55, selling at, sorry, buying at 94.76 and selling at 94.55. So what is happening? I'm making loss. So I'm keeping this a little before so that it will become negative and make things a little easier for me. Multiplied by spot, multiplied by number of contracts, which was 32, multiplied by tick, which is 50, right? The spot number for to take 33,600. Over here, it will be positive for me. Why? Because I'm buying at 94.76 and I'm selling at 96. So it is profitable for me. So this minus this multiplied by number of contract, multiplied by spot, multiplied by tick. There's something wrong. 25,400. Now, is there anything else left, everyone? I don't think so. So this plus this. Okay, great. Voila. It means my answer is absolutely correct. I'm pretty happy that my answer is correct as well. 73,732,800. Right? 732,800. Now can we go and find out the future, sorry, effective interest rate? Now when I go and find out effective interest rate, everyone, what will happen? My this amount divided by what is the borrowing amount, everyone? 48,23,123 multiplied by 3 by 12. Sorry, multiplied by 12 by what is the month over here? 4, right? So now, if you are taking, if you are taking futures, no matter whether your interest rate increases or your interest rate decreases, your effective interest rate is going to be 0.0458. Okay, that is going to be your, if you multiply it by 100 as well, it will make things a little easier for you. 4.58. Right. But if you are using FRA, guys, if you're using FRA, your interest rate was how much? Mhm. Just a second. Your FRA में बेटा interest rate was 4.62. Interest over here is going to be 4.62. I'm just writing it down for the sake, because effective interest is the most important point. Over here it is 4.58. Now, did you notice when I'm using FRA, my interest rate is higher? When I'm using futures, it is a little lower. And now, beta, when I move to options, you will notice that it is damn too lower, right? So now options ke liye, I hope that you all remember there are certain steps, 7 steps that we have to note down. And over here, we have two options which are available. We have to solve for both. First of all, let's solve for 94.5 and then we will move forward with the next one, which is 94.5. Okay, so again, same steps, exercise price, then your closeout price, then exercise, then gain in BP, then total gain, then actual return, then premium paper, and then we have interest. Okay. So now the first exercise price I'm taking is 94.5. Beta, in case of increase and decrease both. It will make things easier for me. I don't need to bold them, just bold this and this. Okay, now exercise price. It is directly given as 94.5. See, control V, control V. Now future closeout price, we have already calculated that. That is 94.55. And over it will be 96.35. Now, beta, we have to remember that we are investing. So this is buy here and sell here. So will you buy at 94.5 and sell at 94.55? If you think for a while, the answer might come out to be yes, we can do that. We can buy at 94.55 and we can sell at 94.55. So over here it will be yes, over here it will be yes. Now what is the gain in basis point? It will be equal to 5 basis points. Correct? It will be 94.55 minus 94.5 into 100. So it will be 0.05 into 100. It will become how much? 5. Right? It will be equal to 50, not 5, sorry. I guess it will be 5 or 50. Everyone just check once. It will be 5. Over here, what will be the amount? 4.5. Check once. So 1.85, that will become, okay, that is a huge margin that we are seeing over here. So this amount multiplied by 100. Okay, now we can find out the total gain that we need. So gain in basis point multiplied by number of contracts multiplied by tick. So now what is the contract size, everyone? That will be again equal to 32 multiplied by tick. That is given as, is it differently given? No. Okay. Okay. So guys, just to check, did I make a mistake over here? Gain in basis point is, that should be 5. Why did I wrote down 50? Okay, fine. Now we have to do the, now we have to find out the gain over here in 185. So that will be equal to this amount multiplied by number of contracts, 32 multiplied by, what was the amount over there? 50, that is tick value. So 29,600. That's a good profit, I guess. Right. Now, actual return we have already calculated. Right. Now, premium payable is the important aspect. Now we are at 94.5. Are we taking a call or put? Sir, I am taking a call. December, March or June? Sir, March. Why? Because Feb tak to I need, so I will need take it for March. So it will be equal to 0.432, 0.43432 multiplied by total number of contracts, which is 32, multiplied by tick, which is 50, multiplied by spot, which is 100. I can directly take the values from above as well, but I just don't want to note them down again and again. So now can I just go and take down everything? This is actual return plus this is the gain minus this is the premium, right? Over here, this is the actual return plus this is the gain minus this is the premium. Wow. So again, I got this correct answer, everyone. So effective interest rate, beta, what I'll do, I'll copy it and I'll paste it over here. So I'll get the effective interest rate directly. I don't have to work more over here because it will be very much easier for me. Premium payable ki jagah, I'll take the this value. Yeah, 4.408. So now did you notice when you're using options, your effective interest rate is decreasing, correct? When you are using options, your effective interest rate is decreasing. Now you have to solve it for one more, correct? So I'll do one thing. I'll copy it completely. I'll paste it over here and now just change a little bit. 94.5 की जगह बेटा I'll make it 95. 95, 95. Now future closeout price को बेटा I'll again write it from directly here, right? It won't take me a lot of time. Now if I buy at 95, sell at 94? No. Will you buy at 95 and sell at 96.35? Yes, I'll do that. Over it will become 0. Over here it will become how much? 135. Okay, it has directly taken, made things easier for me. Now total gain. Total gain के लिए I can do one thing. Look, total gain will be 0 over here. Actual return I can directly take from here. Over here, total gain ka definition I have to change. So this amount multiplied by 50 multiplied by 32. Total gain is 21,600. Oh, sorry, 21,000 I'm saying. 216,000. Okay. Now premium payable will change as well. It was 0.432. Now it will become 0.121. Okay, 0.121. I don't need to recalculate everything. It will be easier for me if I just directly take everything. The effective interest rate. Now, if I just check everyone over here, actual return minus premium payable. Over here it will be, I have to add these two and then subtract. There's a very small difference that we can see over here, but it is fine. It's not compulsory that you will get almost the same answer every time you're solving the future and options. So a small difference is absolutely fine, everyone. You don't need to be worried about it. Okay. So that's it on how you are going to solve your future and options question, a large question which is of like 20 marks, everyone. Okay, so now if I talk about buy and sell, whenever you are borrowing मतलब होता है put. And put का बेटा what does it mean? कि you sell now, buy later. You sell now, buy later. But when I'm talking about investment का means होता है call, that you are buying now, you sell later. Okay, so put में sell now, buy later. Call में buy now, sell later.
Okay. Okay.
Okay,
Okay.
so this is how you are supposed to solve a complete question. In case of increase, if you're taking option of 94.5, be it increase or decrease, it is going to be the same. In case of 95, it will be a little different. It's 4.669 and 4.219. Okay, I'll be sharing a theoretical notes with everyone, guys, where basically what I'll do is I'll share a theoretical note with everyone where I've put down what all you need to remember in theory, and I'll also put down a uh, questions, the theoretical questions note for all of you to just go through and make sure that if you have any doubts on the theory part, it should be clear.